Welcome back to our show, your show, Let's Talk Stocks. Of course, back with us this morning is Mr. Ryan Strachan, Vice President at GK Capital. Of course, Ryan continues to talk to us about the evolution of the Jamaican capital markets. Of course, he's taking a look internationally as well. And so we want to welcome back Ryan. Ryan, welcome again. So for instance, the tourism sector locally has really come on leaps and bounds, well. But we don't have enough of that being reflected in the market.
Correct. Construction.
Yeah.
I mean, we have Carib Cement, but then what about steel providers, lumber, nails, wire? Yeah. You know, all those things that even the builders themselves. You know, in the U.S., the contrast, the Caterpillar is public. That's infrastructure, you know, and then look at it. Even infrastructure, Jamaica has doubled in this COVID period, right?
Right.
No, so yeah, we have a smattering of the ones that really have done well since, but really we're still dominated by commercial banks, or financial institutions. So for as long as that remains a state of play, we may lag, or the market may not reflect the economy, because the economy or the market is not a direct microcosm of the economy, because there's still so many sectors excluded, as you just said. So I think that's one of the reasons. You know,
lot of work to do.
Exactly. We need to get more of these entities listed to allow for public participation, because the sentiment has been shown to follow where the best performing companies.
But let's look back at the U.S. The fintech era has spawned a lot of that. And you spoke to NVIDIA, I think now the second largest in terms of market cap.
Yeah.
And we saw the anticipation when the last quarterly results were to come out, and how it has taken off. What are you thinking about U.S. market, the tech revolution, which seems to know no end right now?
Well, I'm very bullish. I think tech is going to be a universal driver of business for a long time. I don't know if it's growing at the rate it used to. The rate of disruption, I don't think, is where it was.
No.
And it's unlikely, because everything has a limit.
Has to plateau at some point.
The owners or the founders are approaching 50. So they're not the disruptive 21-year-old college students anymore. But nevertheless, I do still think there's a lot of reason for optimism in the U.S. markets. Not so much finance, but infrastructure for sure is still a leading area, because the U.S., and it's well said, there are many buildings crumbling in the U.S., and roads and piping and et cetera, and that's needed to further grow the economy, because really growth tends to follow infrastructure. The infrastructure will allow as much growth as it can, then it has to be upgraded. You see subways in New York, they're building an airport, I think they're expanding JFK.
Yes,
And so I think that's really the first area I'll be looking at. We're seeing now, I think one of the things that's happening globally is media. So tech is disrupting finance, because they use here fintech. Or it has disrupted finance, and it has also disrupted the media. Traditional media, because we get news now from social media, right? We get to watch videos on YouTube. If you miss something on TV, you go on YouTube, it's right there, right? So I think that's now going to be something we're going to start to see, okay, what's the big thing that's really going to bring the two together? Because the newspapers, I think it was said about 2018 that Facebook was trying to acquire the Associated Press, but they can't because of how it's composed. But it shows how these guys are thinking, right? Jeff Bezos owns Washington Post.
Yeah.
Or at least he did. I think he still should own it. So I see a merging of those two spaces coming. I don't know exactly what it's going to look like yet formally, but it's something we're watching keenly. And like everything overseas, it happens locally. Because for me, it's just a matter of time before the trends there end up here. I think though finance, they've had issues because of rates, like the Goldman Sachs, Morgan Stanley, Wells Fargo, J.P. Morgan. It's been rates that have been an issue, Bank of America, but investment banking or trading has helped to bridge that gap,
Absolutely.
and M&A as well. So those with robust investment banking presence have really benefited from the flurry of activity. And if we do now start to see an overlap between tech and finance, and even deeper one, or media and tech, again, then you're going to see investment bankers doing even more work. So that's kind of what I'm watching. We are taking positions in a couple airlines because we think oil prices are going to continue to be soft, and the persons have expressed a desire to travel even more, and have been. Low budget airlines have been particularly attractive in Europe going that way. And I think, I would say that's the extent.
It's interesting because when you look at what OPEC and OPEC Plus just met last week or the week before, and they had to extend some of those production cuts. China is yet to be recovering, so the demand, though there's hope that summer will bring some uptick in terms of oil usage and demand side, but it's really not there.
And then you look at, and that's the demand side, but then you look at supply side, Guyana coming on stream at 1.2 million barrels a day in 2027. Then I think they get up to 2 million barrels a day by like 2030. The gap OPEC Plus is fighting over right now is 1.2 million barrels a day. So that's no, because right now Guyana's at 500,000. So then it comes off, so then now that's another negotiation to happen. And then I said it publicly, I said, well, what does that mean for Guyana as far as it concerns OPEC Plus? And then I gather there's been fines in Suriname. And then it's a matter of, okay, how does that impact supply? The supply
and all that while
well?
US is building stockpiles.
Yes, and they know and they know are a net exporter. So the dynamics have shifted so rapidly that it's a very tough call, in my view, to be bullish on oil. I supply, and I keep saying, you have these smaller OPEC Plus nations who are reliant on the production of oil for their economy. How are you going to convince them to sustainably cut production for a longer than usual
and we saw that, in the last round. There are a number of nations, I think including Iraq, who would have breached that agreement in terms of the cuts that they agreed to.
And I think it was Angola who left the consortium. I think it's Angola. And I mean, it's not entirely surprising because if oil is the mainstay, because I mean, Trinidad was never in the block, right? But they had some tacit agreement, and they never cut, but they could not.
No, it didn't make
economy
sense. Certainly not coming out of COVID, they couldn't.
The economy rests on pumping oil. And I mean, who's going to know such a Ghana, they need to moderate their supply because they literally are building their economy up, right? So they can't either, and I think all of those factors push against any rapid increase now. For the simple fact, inflation, rates still higher than usual. We cannot sustain high oil prices.
And then the geopolitical ramifications between Russia, China, and how they, if and when China's economy comes back on stream, their relationships and who will supply what where.
Yes, it's a lot of things moving all over the place. And a lot of times people say there's a balance of power shifting. I don't know if I agree with that. I think geographically some of these nations are just too far away from each other to really have a cohesive
Indeed.
relationship that's sustained. We can speculate, but I think it's much ado about nothing, in my view.
Yeah. So as we look to wrap, Brian, your stance on our local economy and where would you point investors?
I would point investors to anything that has legs in Jamaica. I think the one impediment to our getting to 5% growth really is the time it takes to get things done and approvals. Once we are able to correct procurement timelines and get a project executed in a year, and at this I can close with this, and I made the illustration. In February 2023, William Mafood from Wasinko said, we're going to deploy $5 billion, expand our factory, and meet the demand that's out there. March 2024, flying over, we're seeing the whole expansion almost done. Then they announced, I believe in May, they have a job fair, and they had to go for double the amount of staff to come and meet the demand. Well, not just the demand, but to fill the respective openings in that had been created through the expansion. And that was a $5 billion deployment. When, and this is regardless of government, just based on the rules, there were projects announced of $5 billion in February 2023 that are still being talked about in March 2024 and haven't broken ground yet. So we'll be waiting 2 or 3 years to get the growth that we should have been having 2 or 3 years of.
So government side need to come up.
The procurement infrastructure is what is holding back the rate of growth now. And I think for as long as that's the case, Jamaica will be a fertile environment with value opportunities because it's not going to outrun the speed of procurement. So you can get in now and just wait because it must fly.
Ryan, while we wrap, we cannot wrap with just allowing you to just mention William Mafood and the Wasinko story, because it points to something. In one of the fundamentals about investing is looking at the management of a company.
Yes.
And Wasinko and the Mafoods have been a prime example of the kind of.
Excellent. I mean, you're talking about from when they listed at $7 in 2017, the growth we would have seen, the margins, the diversity in the business, the branding, the advertising, how they treat the staff, they treat the executives, so they've been very deliberate about succession. They rehired, Sean Scott and create the deputy CEO role. I think it's exemplary. It's a great Jamaican company, and I think many would do well to follow suit where they can. And that is run by a family with, family says that, they've figured out something. And I think books should be written about that story.
Absolutely. It's a company we need to watch. Always very, very interesting when Ryan comes and talks to us. As I tell you, he's the guru. Has tonloads of knowledge on the capital markets. But as we always say, here on Let's Talk Stocks, we give you information to make better financial decisions. Come back with us tomorrow morning at 9. Another insightful program lined up for you.